Hello everyone. Is establishing of a holding structure in Poland tax avoidance, which is not accepted by the Polish tax authorities, or do the Polish tax authorities have no problem with such structure? In today's video, I will show you an advanced ruling issued by Polish tax authorities in which Polish tax authorities analyzed and answered this question upon request of a particular taxpayer. Such advanced rulings are in Poland, in anonymized way, of course, publicly available data, and everybody can view them. My name is Michał Sokołowski. I am a licensed Polish tax advisor, and I provide accounting, cost calculation, tax compliance, and tax advisory services for small and medium-sized enterprises in Poland. In this video, I will show you in the first step, very basically, how the Polish tax anti-avoidance regulations look like. I will show you how an advanced ruling is being processed by the Polish tax authorities, namely what kind of questions are they even answering within such advanced ruling. Then I will show you what a holding structure first of all even is. Then I will show you what are the benefits of it, what steps the taxable person from the mentioned advanced ruling wanted to undertake in order to get such holding structure, and after that I will present to you what the Polish tax authorities had to say about it and whether they viewed it as not acceptable tax avoidance or whether they had no problem with this. So if this is something for you, then follow along and let's get to it. First of all, you have to have some basic fundamental understanding about the landscape of tax avoidance, tax abuse regulations in Poland. First of all, we have a so-called general anti-avoidance rule, a general anti-abuse rule defined in the Polish tax ordinance. According to this regulation, a transaction shall not result in a tax benefit if that benefit, being contrary in the given circumstances to the object or purpose of the Tax Act or its provision, was the main or one of the main goals of carrying it out, and the manner of acting was artificial. Based on the wording of this provision, we see that we have three conditions that have to be met in order to classify a given transaction, a given background, as tax avoidance, tax abuse defined in this provision. First of all, there has to be a tax benefit which was achieved and it is contrary to the purpose of the Tax Act or a specific provision within it. Secondly, obtaining that tax benefit was the main or one of the main goals of carrying out the transaction. And as a third condition, the manner of acting was artificial. No reasonable business person would have structured this transaction in this way for non-tax reasons alone. Polish tax ordinance foresees also some further clarifications as to when a given transaction, a given background should be viewed as artificial, which are only examples of artificial character of a given transaction. Furthermore, you should be also aware that a part of this mentioned general anti-abuse, anti-avoidance regulation defined in the Polish tax ordinance, we also have so-called small special anti-abuse, anti-avoidance tax provisions. There is, for example, a special anti-avoidance, anti-abuse provision, several of them even, defined in the Polish Personal Income Tax Act. We have such special anti-avoidance, anti-abuse provisions in the Corporate Income Tax. There is also one in the Polish Value Added Tax Act, and so on and so forth. And if we are talking about an advanced ruling, please also be aware that within this advanced ruling, it is only being analyzed by the Polish tax authorities whether the presented background, the presented transaction by a given taxpayer fulfills the conditions to treat it as tax avoidance, tax abuse based on this general anti-abuse regulation defined in the Polish tax ordinance. So what is being done by the Polish tax authorities within such advanced rulings? Polish tax authorities only check the existence of those three conditions. So they check if there is a tax benefit that was achieved that is contrary to the purpose of the Tax Act or a specific provision within it. They check if the obtaining that benefit was the main or one of the main goals of carrying out the transaction, and if the manner of acting was artificial. If they come to the conclusion that all of these three conditions are met, from their point of view, the presented transaction, the presented background should be classified as tax avoidance, tax abuse, falling under this general tax anti-avoidance, anti-abuse rule. With the consequences that the benefits arising from the way the taxpayer planned to conduct such transaction will not be accepted by Polish tax authorities. So consequently, within such advanced ruling, Polish tax authorities do not check whether the conditions for application of the mentioned small, specific anti-avoidance, anti-abuse rules defined in other tax provisions are fulfilled. They only focus on this general anti-avoidance, anti-abuse regulation defined in the Polish tax ordinance. Okay, now what the mentioned advanced ruling mentions about the background. It mentions that the application for the issuance of this binding ruling was filed by some natural person which was a shareholder in some Polish limited liability company. For the purposes of this video, we call this limited liability company simply operating activity spółka z o.o. because we assume that there is some kind of operating activity within this company. Namely, this company trades goods, provides services, or this company maybe manufactures goods and sells them to other entities. We also assume, although it is not mentioned explicitly in this advanced ruling, we assume that this person has 100% of shares in this operating activity spółka z o.o. Of course, in reality, most probably such person would like to have may want to have some additional shareholder which has at least 10 or 20% of shares in order to not be subject to social security and health security contributions that are being paid in Poland due to the fact of being a sole shareholder, a person having 100% of shares in a limited liability company. But for the purposes of this example, of this video, we simply assume that this person had 100% of shares. And what this person wanted to do is to create a holding structure, namely a situation where this person does not keep shares in this operating activity spółka z o.o. directly, but this person holds 100% of shares in a newly established company, namely holding spółka z o.o. And this holding spółka z o.o. keeps 100% of shares in this operating activity spółka z o.o. So what this person wanted is, this person wanted to move the operating activity spółka z o.o. under the holding spółka z o.o. So why would this person even want to have such holding structure? This person named several reasons why this holding structure is desired in the advanced ruling application. I will go through these reasons later in this video, but for now I will focus only on the two main reasons from my at least perspective that are visible due to the fact that there is someone who's desiring to have a holding structure. What this person most probably thought is the following. In the current situation, the operating activity spółka z o.o. is generating some profit, and this profit is subject to corporate income tax at the level of 9% or 19%. And furthermore, this person understands that as long as this profit stays at the operating activity spółka z o.o., in case of any claims toward this operating activity spółka z o.o. of civil law or public law nature, these claims would have to be paid out of, amongst others, out of this profit. So what this person would like to do is to move this profit out of the operating activity spółka z o.o. in order to ensure that this profit, this money, is safe and would not have to be paid in order to satisfy such potential claims. This person understands that in such situation, the only way of moving this profit out of this operating activity spółka z o.o. would be to pay it out to him. Now, this person for sure understands there are various ways of paying out profit to a shareholder from a Polish limited liability company other than a dividend. But from my point of view, this person understands that in case of this person, the only reasonable way to move significant parts of this profit to this person would only be dividend. Why? Because, for example, there is too much profit to pay it out as a remuneration for services or based on any other title other than a dividend. Secondly, for this person, according to this person's individual preferences, paying the profit out in a way other than a dividend is too risky. This person simply do not want to go this way, and for this person the only reasonable way to pay out the profit to her or to him is to pay it out as a dividend, which would result in the payment of the personal income tax on the dividend received at the rate of 19%, which this person would like to avoid. This person do not want to pay this personal income tax, but on the other hand, this person would still like to move this profit out of the operating activity spółka z o.o., but without having to pay personal income tax at the rate of 19%. So this person consequently looks at a holding structure and sees that if this operating activity spółka z o.o. would belong to a holding, which on the other hand would belong to this person, then at the level of this operating activity spółka z o.o., again, there would be some profit, and this profit, of course, would be also here subject to corporate income tax at the level of 9% or 19%. But this person sees that in case of such holding structure, if this profit would be distributed to the holding spółka z o.o. as a dividend, then at the level of the holding spółka z o.o., according to Polish corporate income tax provision, this dividend would be exempt from corporate income tax. There will be no tax payable on this dividend. And therefore, thanks to the holding structure, the profit generated at the level of the operating activity spółka z o.o. could be moved out of this operating activity spółka z o.o. for free, because there would be no tax paid on a dividend received by the holding spółka z o.o. So this profit would be safe from potential civil law or public law claims directed towards operating activity spółka z o.o. Whereas in the situation without holding, as long as this profit stays in the operating activity spółka z o.o., this profit can be lost due to potential civil law or public law claims, unless, of course, it would be paid out to the shareholder, which would cost 19% personal income tax. And therefore, the first main reason why such holding structure is usually chosen by taxable persons in Poland is that it enables to secure the profit and move it out of the operating activity spółka z o.o. Once this profit is in the holding spółka z o.o., it is safe from potential civil law or public law claims towards the operating activity spółka z o.o. With disclaimer, namely, if this person being a shareholder at holding spółka z o.o. is at the same time member of the board at the operating activity spółka z o.o., still this person may be liable in solidarity with operating activity spółka z o.o.'s for operating activity spółka z o.o.'s liabilities in case it would be proven to this shareholder, being at the same time also the member of the board of the operating activity spółka z o.o., that he has not filed the application for bankruptcy on time. So having this in mind, the first benefit of the holding structure is securing of the profit generated at the level of operating activity spółka z o.o. In terms of this advantage of securing the profit, securing the assets in case of a holding structure, it is also worth mentioning that this effect, this result of security would be even higher in case the holding spółka z o.o. would be replaced with a family foundation, mainly due to the fact that the family foundation is shareless. It does not issue any shares, any titles of ownership to the founders. Okay, so what is the second desired outcome, the second benefit of having a holding structure in comparison to a situation where a natural person holds directly shares in a operating activity spółka z o.o.? This advantage lies in the fact that if this natural person, without having the holding spółka z o.o., if this natural person would like to establish a new business, so this person, we can assume that this person now, for example, sells TVs, and now this person would like to have another company, let's call it operating activity 2, spółka z o.o., which would sell furniture, for example. And this person sees that if the activity of the operating activity 2 spółka z o.o. at the beginning should be financed out of the profit of the operating activity spółka z o.o., then first of all, the operating activity spółka z o.o. would have to pay out a dividend to the shareholder. The shareholder would have to pay 19% personal income tax, and then he could, out of the dividend, out of the money received through the dividend, he could finance the operating activity 2 spółka z o.o. But if we look at this more in detail, and we, for example, assume that there was 100 zloty or 100 monetary units of profit, then if we, for example, assume that the operating activity spółka z o.o. paid 19% corporate income tax, then we have net profit of operating activity spółka z o.o. at the level of 81, because it paid 19% corporate income tax. When we now also furthermore assume that out of those 81, the personal income tax on the dividend to the shareholder was paid, which is 1539, 19% out of the 81, then we see that what is left for the shareholder to finance the operating activity 2 spółka z o.o. business is only 61. So out of 100 of profit made by the operating activity spółka z o.o., after distribution to the shareholder has only 61 to be paid into the operating activity spółka z o.o. And in case the shareholder would like to create a separate second operating activity spółka z o.o. within the belonging to the holding, then the situation is different, because in order to finance the operating activity of this operating activity 2 spółka z o.o., first the dividend out of the operating activity spółka z o.o. would have to be paid out to holding spółka z o.o., and then holding spółka z o.o. finances the business of operating activity 2 spółka z o.o. So in this case, out of 100 of the profit made by the operating activity spółka z o.o., Again, 19 would be paid as this operating activity spółka z o.o.'s corporate income tax. So what is left is 81. So here, in case of a holding structure, out of 100 of profit made by the operating activity spółka z o.o., 15.39 more could be moved to the operating activity to spółka z o.o. It would be 81 with which this company could be financed against 65.61, which is the amount with which the operating activity to spółka z o.o. could be financed in case of a structure without holding. So the shareholder, as a second benefit, as a second advantage of the holding structure, this person sees that everything which is moved between all of the profit that is moved between the operating companies, the operating activities, spółka z o.o.'s and holding, is only taxed once, namely with the corporate income tax at the level of each operating activity, spółka z o.o. Consequently, this person most probably comes to the conclusion that it is more optimal for him to let the money be reinvested by the holding in new investments, and these investments can be everything what this person desires. Yeah, this can be another operating activity. This can be an investment in cryptocurrencies. It can be investment in pieces of art. It can be an investment in cars. Whatever this person likes and whatever the preferences of this person are, such investments can be made using the holding structure. And from this person's perspective, it is more efficient to let the money circulate within the holding and the operating activity companies, and later, gradually pay this out over the years to the shareholder. Okay, so now that we know what could motivate someone to create such holding structure, the question arises, how do we even get to such structure in the first place, from having only a operating activity spółka z o.o. to having a structure with a holding company? From my point of view, when I read the advanced ruling, I understand out of it, although not all of this is mentioned in the advanced ruling, I understand that at the beginning, this taxable person, first of all, a part of the already existing operating activity spółka z o.o., this person created additionally another company, which in the future should take over the role of the holding company. And this taxable person has considered several scenarios of moving the shares of operating activity spółka z o.o. to holding spółka z o.o., out of which one scenario was chosen. And before I describe what scenario was exactly chosen, what could potentially other scenarios be? Of course, in reality, depending on the exact background, there will be many different ways of how such holding structure can be created. But when it comes to some few fundamental possible scenarios, we could, for example, consider selling the shares of operating activity spółka z o.o. to holding spółka z o.o. So this taxable person concludes an agreement with holding spółka z o.o., and according to this agreement, this natural person, the taxable person, sells the shares in operating activity spółka z o.o. to holding spółka z o.o. But we have also take into consideration that usually in such cases, the operating activity spółka z o.o. has already been conducting business for years or even decades. And most probably the value of shares, the market value of shares in the operating activity spółka z o.o. is very significant. On the other hand, usually the shares in such companies were obtained by taxable persons, by the natural persons. At the moment of establishing such operating activity spółka z o.o., through injecting the funding capital only at the very minimal lowest value. When you additionally also take into consideration that according to the Polish personal income tax provisions, if the sales price for a good or a share is set by a taxable person at the level which differs from the market level of a price for such good or a commodity or a share, then the tax authorities are entitled to increase this price set in the agreement to the market level. As a consequence, in case of a sale of shares in an operating activity spółka z o.o., assuming that these shares were indeed valuable and also assuming that this taxable person obtained the shares in operating activity spółka z o.o. while creating this company and injecting only the funding capital at minimal value or some low value, then the sale of shares in operating activity spółka z o.o. to holding spółka z o.o. would result in a very high taxable income, which would be subject to 19% personal income tax. And therefore, this alternative was for this person most probably completely not acceptable. Another solution of creating the holding structure would be to perform a in-kind contribution of shares in operating activity spółka z o.o. to the holding spółka z o.o. We can call this contribution in kind also as a unqualified share-by-share exchange. I will explain in a minute what I mean by unqualified share-for-share exchange when I describe to you another alternative, namely the qualified share-for-share exchange. So how would this contribution in kind / unqualified share-for-share exchange look like? The natural person would contribute in kind the shares in operating activity spółka z o.o. to holding spółka z o.o., as a result of which the holding spółka z o.o. becomes the owner of shares in operating activity spółka z o.o. And for the shares in operating activity spółka z o.o., holding spółka z o.o. issues another additional shares to the natural person. However, as a result of proceeding with this solution, also, similarly as in case of sale of shares, taxable income would arise for both the taxable person as well as the holding. And for both the taxable person and the holding, this taxable income would be equal to the market value of shares in operating activity spółka z o.o., namely the shares that were in kind contributed to holding spółka z o.o. So this is even a more devastating solution. As a result of that, this taxable person doesn't also want to proceed with the second alternative, namely with the contribution in kind / with the unqualified share-for-share exchange. What this taxable person chooses instead is a so-called qualified share-for-share exchange, which is income tax exempt both for the shareholder, for this taxable person, as well as for the holding spółka z o.o., which is the company acquiring the shares. In principle, this qualified share-for-share exchange will look like a standard contribution in kind of shares. However, several additional conditions have to be met in order to treat such qualified share-for-share exchange, which is personal income tax and corporate income tax neutral. Some of these conditions, but not all of them, are, for example, that in exchange for the shares in operating activity spółka z o.o., the holding company has to issue new shares to the shareholder or issue new shares and additionally pay an amount in cash which does not exceed 10% of the holding spółka z o.o.'s nominal value of shares. Additionally, As a result of the whole transaction of share-for-share exchange, holding spółka z o.o. has to obtain the absolute majority in the voting rights in the operating activity spółka z o.o. And in order to treat this transaction as tax neutral, it has to be performed out of justified economical reasons other than tax avoidance. And this last condition is an example for the so-called small special anti-avoidance, anti-abuse rule in the Polish tax provision, which exists parallelly to the general anti-avoidance, anti-abuse regulation defined in the Polish tax ordinance. And consequently, the plan of the taxable person presented in the application for issuance of the advance ruling is to establish the holding structure through the qualified share-for-share exchange, which is personal income tax and corporate income tax exempt. In light of this, for this taxable person, there are two groups of ways of establishing the holding. There is the first group where we have sale of shares and the unqualified share-for-share exchange. And on the other hand, we have the second group where we have the mentioned qualified share-for-share exchange. The first group of solutions leads to personal and corporate income tax payments. Well, in case of sale of shares, there would be only personal income tax payment at the side of the seller, of the taxable person, but in case of the qualified share-for-share exchange, there would be both personal income tax and corporate income tax payable. And on the other hand, in the second group, in case of the qualified share-for-share exchange, there is no personal income tax and corporate income tax. And this is the tax benefit that this taxable person is obtaining due to the fact of establishing the holding structure in the chosen manner. So consequently, what this taxable person is asking for in the application for issuance of the advance ruling is to confirm by the tax authorities if this tax benefit will be treated by them as tax avoidance, tax abuse, not acceptable according to the Polish general anti-avoidance, anti-abuse rule in the tax ordinance, or if the Polish tax authorities are okay with this solution and they will accept and consider this tax benefit in the tax settlements of this taxable person and holding spółka z o.o. What we also see from the advance ruling itself is that the taxable person has named few reasons why the planned creation of the holding structure and the way this holding structure is created has economical reasons. What are these reasons? The holding company is to be an entity that accumulates family capital and reinvests profits into new investments activities. The establishment of the holding structure guarantees greater flexibility in reinvesting not only dividends generated by individual operating companies, but also revenues from the potential disposal of individual assets, as profits from any potential sale will remain largely within the holding and will be used for further reinvestment and wealth growth. Furthermore, consolidating assets within a single entity will also result in cost savings, as managerial, administrative and supervisory functions will be carried out by one entity. This reason refers, of course, to the fact that the taxable person planned to create sort of a shared service center in the holding that will provide services for group companies. Furthermore, the centralization of assets will facilitate further investments requiring larger capital commitments. An additional advantage is that the creation of an entity that is more credible to potential co-investors or financial institutions providing external financing, which may result in more favorable business cooperation, offers, or preferential terms on liabilities undertaken for individual investments. Conducting all businesses under a common brand positively affects market recognition, which can help build credibility in dealings with contractors and co-investors. The holding activities are aimed, among other things, at securing assets and streamlining the company's development process. Through the centralization of assets in the holding's shareholder and members of their family, who may become shareholders of individual companies in the future, are protected from personal liability in the event of potential claims from contractors. The establishment of a holding company will also simplify asset management principles, as managerial decisions concerning individual investments will always be made at the level of the holding, as the parent entity, setting the business strategy for all of its subsidiaries. The centralization of assets in a single entity is intended to facilitate assets management. The holding's profits will be accumulated for future investments and for the purpose of securing the holding's shareholder and their immediate hires. The scope of business activities conducted by the holding as a capital company will in principle be unlimited, allowing the holding greater freedom in conducting operational activities than, for example, a family foundation whose permitted scope of business activity is limited by law. This is, of course, something what the taxable person indicated, and it is correct because the scope of business that can be carried out by a family foundation is limited. But that, of course, doesn't change the fact that the family foundation can set up operating companies through which this business, which is not directly allowed for a family foundation as such, can be carried out. And as the less economical reason for creation of a holding structure, the taxable person indicated that the establishment of an ownership structure involving the holding may also streamline the potential future disposal of assets by the holding, and so on and so forth. Having in mind these economical reasons indicated by the taxable person, as well as other information regarding the background, in the first step, Polish tax authorities, namely the head of the National Revenue Administration, analyzed the question whether the tax benefit is contrary to the purpose of Tax Act or its provision. And as a result of this analysis, he came to the conclusion that no tax benefit arising from this transaction conflicts with the purpose or provisions of any of the three relevant tax acts, namely the Personal Income Tax Act, the Corporate Income Tax Act, as well as the Tax on Civil Law Transactions. Because what I've maybe not mentioned earlier, the transaction of exchange of shares would be subject to civil law transactions. However, I focused in the presentation mainly on the income taxes, personal income tax and corporate income tax, because they would present the most significant cost. The applicable rate of the tax on civil law transactions would amount 0.5%, a half of percent. In the next step, the Polish head of the National Revenue Administration analyzed the question whether the obtaining of that tax benefit was the main or one of the main goals of carrying out the transaction, the restructuring. And the head of the National Revenue Administration came to the conclusion that the transaction is economically justified for three key reasons, and therefore obtaining the tax benefit was not the main or one of the main goals of carrying out the transaction. First of all, from the point of view of the Polish tax authorities, the process of restructuring into the holding structure was a logical continuation of a multi-step restructuring process that began with consolidating the shareholders' various businesses activities into one single entity. So before creating the holding, he merged all his companies into one single limited liability company. Secondly, the holding structure serves legitimate goals including asset management, intergenerational succession planning, and operational efficiency. The second sentence most probably was based on the previously presented economical reasons of creating the holding structure presented by the taxable person. And thirdly, and from the Polish tax authorities' point of view, most critically, tax benefits are not the primary motivation for the transaction, which from their point of view results in the fact that the anti-avoidance rule under the Polish tax ordinance does not apply and the transaction is protected from challenge by the tax authorities. However, the Polish tax authorities also indicated a caveat in the advance ruling, namely that the whole assessment assumes that no sale of the company's shares to an external investor is planned. If such a sale were already in the pipeline, the entire transaction could be viewed differently and potentially scrutinized as tax motivated. What this meant by that is that in case of a holding, there is a special regulation according to which a sale of shares in a subsidiary company by the holding company can be corporate income tax exempt at the level of the holding company if particular conditions are met. One of those conditions requires that the holding company has to carry out actual real economic activity, which creates an interpretational problem because no one really knows what should be really understood under this actual real economic activity, and therefore not many are trying to apply this tax exemption. Nevertheless, the Polish head of National Revenue Administration makes this caveat that the whole assessment assumes that no sale of the company's shares to an external investor is planned. So in other words, what the head of the National Revenue Administration is trying to say is that if the taxpayer, instead of his presented plans to accumulate and grow the assets through the holding structure, this taxable person would in reality only try to create such holding structure in order to sell the shares in the operating activity, and consequently, thanks to the holding structure and the mentioned tax exemption, the profit made on the sale of shares would be tax exempt. Then from tax authorities' point of view, the entire transaction, the entire restructuring into a holding structure could be viewed differently and potentially scrutinized as a tax motivated transaction. In the next step, the head of the National Revenue Administration analyzed whether the manner of acting of creating this holding was artificial, and the head of the National Revenue Administration concluded that the transaction is not artificial. He concluded that the structure is straightforward, no operations are being artificially split, no economically unjustified intermediaries are involved, the transaction does not simply recreate a pre-existing state, and there are no self-canceling elements. Crucially, the economic risks involved are proportionate to the benefits sought, and the tax advantages gained are a reflection of real economic activity rather than a driver of the structure. So there you go. You see that first of all, the head of the National Revenue Administration agreed that there indeed is a tax benefit, but came to the conclusion that this tax benefit is not contrary to the purpose of the Tax Act or its provisions. Secondly, he concluded that obtaining that tax benefit was not the main or one of the main goals of carrying out the transaction. And thirdly, he stated that the whole transaction, that the whole restructuring into a holding structure is not artificial. Consequently, from the head of National Revenue Administration's point of view, in this case, presented by this particular taxable person, the conditions for applications of the general anti-avoidance regulation defined in the Polish tax ordinance are not met, and therefore the tax benefit that arises at the side of the taxable person should be accepted by the Polish tax authorities, and the tax authorities should consider this tax benefit in the tax settlement of the taxable person and in the tax settlement of the holding company. As you see, based on the example presented in the discussed advanced ruling, creation of a holding structure does not have to be treated as not acceptable tax avoidance falling under the general anti-avoidance rule defined in the Polish tax ordinance. Of course, I hope you also see that every case should be analyzed in detail separately, because as you saw from what I've presented, if this taxpayer's intention would indeed only be to sell the shares in the operating company and the whole holding structure would be created only to conduct this sale transaction, then the conclusion of the Polish tax authorities would be different. They would treat it as indeed as a transaction falling under the general tax anti-avoidance regulation, and the tax benefit in form of the tax exemption at the sale of the shares would not be accepted by the Polish tax authorities. Okay, this is everything I had to share in this video. I hope it gave you some information that will be useful. I wish you a beautiful rest of the day and see you next time. Bye.